Well, we got some exciting news this morning. For the first time in 4 months, we did not have a hot CPI report. So the expected number that we were going to be coming back at was 3.4% inflation over the last 12 months. And that's exactly what we got. And because of this, the market is in fact loving this data. You guys can see that BTC is pumping. Most everything is in green over the last 24 hours. That's very exciting. It's a step in the right direction. And maybe this is that part where the market starts to flip. Now, I will say this. Is this a moment to rejoice? Do we think that this is the end? No. Okay. This isn't the end of inflation or anything like that, but it is a step in the right direction. Note that inflation is still high. The Fed's goal is down in that 2% range. We're at 3.4%, so we have a ways to go. And you guys can see that, last 3 months alone have equated to what? 1.4% inflation alone. 1.4% per quarter is not going to cut it, guys. But it's like I said in my video earlier today, is that although wholesale numbers came back high, so suppliers are still, paying high amounts for goods and services, spending is down. And that's what the Fed wants, right? That's the whole point of it. Interest rates being as high as they are is you try to cut down on spending to pull some of that demand out of the economy to let prices start to at least stabilize, right? Maybe come back down. It's not disinflation, right? We're not going the opposite way, but at least slow down and temper this insane level of growth in terms of prices that frankly not sustainable. That's where we're at right now. So again, the market is loving this today. And sometimes it takes, 12 to 36 hours to truly digest this data. The immediate movement in the market was positive. And that makes sense because it finally seems like a change from what we've been stuck with. Now, what this also means is that likely the Fed is not going to change their stance, right? We know that they are planning on keeping interest rates consistent until the data is conducive for them dropping it. And right now, this probably doesn't mean that it's ready to drop yet, but it's a step closer to that. I know people have talked about June as far as the first FOMC meeting where they're going to drop interest rates. I don't think that's the case at all. I think it's still going to be later this year as we get closer to the election. That seems to be the time. We're going to need more reports like this where things are starting to slow down, where the economy is starting to crawl a little bit. That's the big thing we're waiting for. So while this doesn't necessarily mean that we're going to explode from here, what it does mean is that we're flattening out. We're dealing with less of the negative pressure. And that's where, again, prices can start to essentially rebound. This isn't the instant flip, turn, spike in the market, but it's a slow inflection point that may send us back the opposite direction. So I appreciate you guys as always. I would love to hear your thoughts on this, but I hope you guys enjoyed the video. Have a great day. I'll catch you guys in the next one. Take care.